bring in David Zervos this morning, Jefferies chief market strategist. David, I assume you were listening to that. We've talked about sort of stepping on the brakes and the gas at the same time for a while, but that's a lot of coal in the engine.
Yeah, I mean, it's stimulus, it's fiscal stimulus. I'm not as excited as Carl, always about fiscal over the lack of monetary is probably more important. But, look, we've had you guys were talking about it earlier this morning. We've had a kind of slight change of heart in terms of Fed policy expectations. Whether correct or not remains to be seen. But I think people are using the war in the Middle East issue to kind of revise their views of how aggressive the Fed might need to be, even in the face of what's been some pretty incredible data over the last intermeeting period, as you guys have all highlighted as well.
Well, which ones stand out to you?
Well, the expectation data on inflation, both New York Fed and Michigan, I think, are probably the ones that are going to worry the Fed the most. Those were recent and they were big, and they're not going in the right direction. So I think the market's underestimating how important the Fed will see that. I think the 336 payrolls, you can probably knock that off and just say that's a one-off. But we've had 2.3s on the core CPI in a row. It's not really going in the right direction, even if some of the internals are good. But, without what's happened in the last week in the Middle East, I think there would be a very good case for the Fed to be moving November 1st. But more than likely, they're going to see it as an opportunity to watch and see how all of these events unfold.
But couldn't the rise in inflation expectations, David, just be chalked up to the fact that gas prices are higher and oil prices have made a significant move, and that affects consumers' confidence and expectations about inflation, which, by the way, should hopefully go the other way?
Yeah, and look, the TIPS market hasn't really done much, so it's not coming into the long-dated five-year, which the Fed looks at. That's still been very range-bound. But, the long-dated expectations moved in Michigan, and I don't want to put too much weight on it, but I do think expectations are something they're very focused on. And they're really looking at winning this battle. They want to get inflation back toward 2% over the next couple of years. I think that's Jay's goal as he sort of swan songs off into the sunset. And I don't think he wants to go down as the guy that lets inflation hook back up, either going into a presidential election or after the presidential election.
Agree. So I think one of the questions to that end, which has been strangely confusing, is the economy accelerating or is it weakening? And how do we judge exactly what's happening? Because GDP data for Q3 looks set to be very strong.
Well, not just that, Sarah, but the last 4 quarters have all been over 2%. We've seen one of the fastest drops in inflation in post-World War II history. I think the third fastest, 1975 and 1982, are the only faster drops over a one-year period from June of last year to the summer, and then where we are now, all while growth has been above potential and, as you point out, accelerating. This is not fitting a Phillips curve model. This is not fitting a Fed FRB US model. I think there's probably a lot of happiness with what happened with inflation, but there's also a lot of concern that they don't have a great storyline. I think the storyline is a supply-side story, as we've talked about, but I think they're a little nervous about it, and they're nervous that the growth could bring with it a hook back up in inflation, which it very well could do. Demand might not be as pressured to the downside as they had thought with 525 basis points of hikes in there. And, sir, we've written a lot about why we think the balance sheet and the size of the balance sheet and some of the losses that are on the balance sheet have acted in a more stimulative way than in past cycles, maybe nullifying or partially nullifying some of that 525 bips.